The US dollar is at an all-time high and is crushing global currencies. Now, since the last time we talked about the dollar, he has soared over 2%, smashing above 113 on the dollar index. The Federal Reserve's rate hikes are taking effect. The Fed funds rate is now above 3%, and we are seeing global markets crater to hell. The S&P is about to make new lows, crashing below 3,700, and everyone is panicking. This is what happens when the economy has relied on funny money and low rates for over a decade. The Fed has essentially pulled away the punch bowl while slapping us in the face to wake up from fantasy land. But the bigger crisis we are having today is how the strong dollar is pushing global currencies to breaking point. We are seeing currencies weaken tremendously against the greenback. Europe, in particular, is taking a very bad beating. We have the euro crashing below the dollar parity again, while the British pound has gotten clobbered all the way down to a 37-year low. In fact, we have Citibank saying that the pound could crash all the way to parity as well. We could have one British pound equaling $1 very soon. There's no escape. The almighty dollar is coming for you and me. And guess what? It is very likely that the dollar is going to keep getting stronger. The end game is not here yet. We just heard Putin's speech about mobilization, and this means the conflict in Ukraine is going to escalate. And I think by now we are all experts on what that means, right? Inflation is going to go through the roof. The West, especially the United States, is going to continue pouring money into the situation, right? This will cause big problems for Jerome Powell, who's trying to wrestle down inflation. He has no choice but to continue hiking rates higher and for much longer. And if you're outside of the United States, doesn't matter if it's Europe or Asia, your local currency is going to get devalued even further. And we need to pay attention to what Powell said in the recent Fed meeting after hiking rates by 75 points. He stated, "My main message has not changed since Jackson Hole. The Federal Reserve is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done." Powell is channeling his inner Paul Volcker, and he's going to crush inflation and destroy the global economy in the process. Now, the world is too reliant on the dollar, and that is why we are facing a dollar shortage today. That's the big problem. We got to understand that the US dollar is still almost 60% of foreign reserves across the world. Yes, its share is dropping, but it's still a tremendous amount. Countries still need to hold enormous dollar reserves because almost everything is priced in dollars. We can see that except for Europe, over 70% of transactions are settled in dollars, and the situation gets worse. Because of the dollar's perceived stability, over 60% of foreign debt is issued in the US dollar as well. This puts foreign countries in a very sticky situation. So it really doesn't matter how strong or weak the dollar gets. If you want to buy commodities like oil and gas or gold, you need dollars. If you need to make bond repayments, you need dollars as well. And with the Fed hiking rates and doing quantitative tightening, dollars are leaving the system. The currency crisis we are having is actually a dollar shortage. And because interest rates are rising higher and we are slipping deeper into a recession, everyone is selling all their assets and sitting in dollars. Even money is leaving the bond market, the so-called safe haven during a recession. We can see the 10-year yield just spike relentlessly, reaching almost 3.7%. People are pulling their money out. The market knows more rate hikes are coming, so what's the point of buying bonds now when yields are just going to soar higher later? In fact, the 2-year Treasury has hit a 15-year high of 4.2%. The yield curve inversion is getting worse. People are extremely bearish. They know that we are in a recession. So if money is leaving the stock market and bonds and commodities like precious metals are also tanking, where is it going? It is heading to cash. And because investors are hoarding dollars, the supply of dollars is under pressure. Countries are forced to pay more for it. This shrinks the supply even more and causes the value of the dollar to soar higher. Powell has created a deadly vicious cycle that's keeping the dollar on top. And the currencies that will suffer the most are going to be the ones from big importing countries. We are talking about China, Germany, the UK, and India as well. Their currencies are in free fall against the dollar. And to defend against this devaluation, countries have to sell away their US dollar stockpiles to save their currencies. We have India selling $100 billion in just a year to defend the rupee's value, but it doesn't seem to be having any effect. The rupee is still at a record low. People are fleeing to the US dollar because of what the Federal Reserve is doing. The Fed is front running every country when it comes to hiking rates. The pattern is very obvious. The Federal Reserve hikes rates first, then other central banks start hiking in response. And this gives the US dollar a powerful edge and is the slowest ship to sink. So here's the thing. People are abandoning their own currency and swimming on board the US dollar. We even have the Bank of Japan intervening in the currency market to keep the yen afloat. This is the first time in 24 years. Japan isn't hiking rates, so the only other choice they have is to sell their dollar reserves to buy up more yen. And this just feeds into the deadly cycle of the dollar strength. Japan doesn't have an unlimited supply of US dollars. They are not the Federal Reserve. They can't print dollars to infinity. They will run out of ammunition sooner or later. In fact, it is estimated that Japan has only $110 billion at the Fed's repo facility that can be used to defend the yen. Now, the repo facility is where many foreign central banks keep their dollar reserves. They have stashed around $300 billion there that they can draw upon in a currency emergency without affecting the markets. But after that, they have no choice but to start selling their US Treasury holdings, and that will cause another financial disaster. Now, this dollar shortage is going to get worse. I wish I had good news, but winter is coming, and Europe's situation is going to get worse. This energy crisis is going to spill over into the currency markets. The US dollar is about to get even stronger. So we know Russia has turned off their gas supply to Europe, and as winter approaches, Europe is under threat of freezing and their industries collapsing. Cheap energy from Russia has gone away. Now it seems that Germany's gas reserves are over 90% full despite Russia cutting supply. And let's just assume it will get them through winter, right? Now, during this 3-month period of their reserves drawdown, Europe is still importing LNG from other countries such as the United States and Qatar. In fact, Germany is about to sign more LNG contracts with the UAE. They need dollars for that. Even after this winter ends, Germany and other EU countries will have to fill up their gas reserves for next winter. Winter is still coming for Europe in 2023 again. And guess which currency these contracts are in? US dollars, guys. The majority of oil and gas from the Middle East are priced in dollars, and America is definitely selling their energy to Europe in dollars. Now, what does this mean? The demand for the reserve currency will continue to soar and stay high as this energy crisis gets worse. Remember that in the past, the EU was paying Russian euros, well, some parts of it for their gas. Now that that has been cut off, the euro is less useful. Europe needs energy that's now priced in dollars, so they either spend their USD reserves or the euro is going to crash even further. We can see that the US dollar is stealing market share from the euro as the dollar shortage continues. In early 2021, they were both at around 39%. Now the dollar is firmly in the top spot at 43%. And as this gap grows, the dollar becomes stronger and the euro becomes even weaker. And this is why this currency crisis is likely going to get worse as winter approaches. This could even drag well into 2023 as the rate hikes continue and Europe's energy problems continue. We have Germany and the UK bailing out energy firms, throwing money to solve the problem. Germany has nationalized Uniper with 29 billion euros, while the UK has announced a 40 billion pound energy bailout with electricity price caps coming. Now, all this spending is very inflationary, we all know that, and it's going to cripple their currencies even further. As a whole, the EU has allocated 500 billion euros to manage this energy crisis. We can see for the UK, it's over 6% of their GDP, while for Germany and Italy, it's nearly 3%. That means printing more money through deficit spending, so they might be able to save their economy in the short term, but the currency crisis will get worse. Now, if you're an American, a stronger dollar might sound like a good thing, right? Headline inflation might be coming down because the dollar is outperforming other currencies. So if you're importing stuff from overseas, maybe it's China, maybe it's Japan, things will be cheaper. But there will come a point where countries have spent all their dollar reserves and are going broke. This is when the financial apocalypse will hit the United States as well. This is the turning point, the inflection point, when countries start dumping their US treasuries for cash. Japan and China, they have been cutting their treasury holdings for months now. We know China is trying to de-dollarize in case of sanctions, but they are also defending the yuan from horrific devaluation. Japan is doing the same thing. They are cutting down on their US debt holdings to prop up the yen, because if they don't, local inflation will soar to the moon. They have to sell their treasuries to raise US dollars to buy back the Japanese yen to restore confidence in its currency. It's an emergency for Japan because investors are running away from Japanese government bonds. This currency crisis goes beyond just inflation for them. Overseas funds have sold over $18 billion worth of Japanese bonds in just a single week. And if this continues, Japan will have difficulty raising money to grow its economy. And we can see that the bond yields there, they are a joke. Well below 0.5% for their 10-year, while the US is almost 4%. And now the yen is getting depreciated. Investors realize the currency risk here is too big. What's the point of earning a measly 0.2% yield when the yen could drop 5 to 10% against the dollar in just a few months? And this is how bad the currency crisis can get. It is not just jacking up local inflation. Your government bonds are becoming less attractive, and this situation could go global. We have dollar shortages and currency crisis popping up everywhere. If countries start selling their treasuries, this could cause bond yields to soar back in the United States. And if government bond yields go up, everything else will fly up as well. Your mortgage rate and your repayments will rise. Companies can't grow because their cost of borrowing will soar even higher, and that means the layoffs. We can see US corporate debt already at a 5.4% yield. That's more than double the cost of borrowing from just a year back. Now just imagine if debt shoots up to 7 or 8%, the markets will collapse even further. So this currency crisis might be thousands of miles away if you're in the United States, but it will boomerang back and hit the American economy sooner or later. And things are going to get even worse as we head towards winter. The big wild card is Europe's energy crisis. Does the EU have enough money to buy the energy that they desperately need? Because if they don't, they might start to liquidate their treasuries to pay for their gas bills, right? This will create a deeper sovereign debt crisis back in the US. Bank of America already calls this the worst bond sell-off since 1949, and it's going to get messier. This currency crisis is showing everyone one big realization, and that will reshape our financial world. Countries are too reliant on the US dollar, and now we are paying the price. The world is at the mercy of the Federal Reserve. Jerome Powell is the master of the world. And this is going to spark a bigger wave of de-dollarization. Countries are going to realize they need to diversify away from the dollar, and they're going to attack the problem from all sides. The world is getting pissed off. We will see central banks start stacking more gold. Countries will also start making more bilateral trades with their local currencies. We could even see the rise of a new reserve currency in the East if this crisis gets bad enough. So it's time to hang tight. This roller coaster ride has a few more twists and turns left. We are going to plunge deeper into a financial hell. So let me know what you think in the comments below. How bad will this currency crisis get? Are countries heading towards default or even higher inflation thanks to the dollar? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these insane times.